So the first thing that you want to look at, right, is my. All right, so I'm going to show you how to operate the platform ThinkOrSwim. ThinkOrSwim is I utilize for option trading. So let's go ahead and dive in. So what I'll do is click log in. Obviously, I have a facial recognition, so it's gonna see my face. It's gonna log me in, right? So what we're currently going to look at is I'm looking at paper trading, right? And I like to break this down. Your screen may not look like mine because I removed some things, but I want to break down everything inside of here, right? So the first thing that you want to look at, right, is my position movers. My position movers simply represents what positions that you currently hold. All right. So for example, I'm looking at AAPL, which is the ticker for Apple, and then we're looking at Tesla, which is the ticker for, TSLA, which is the ticker for Tesla. What I want you to understand is it says I'm down negative 0.01%. P&L day. P&L stands for profit and loss. All right. P&L stands for profit and loss. All right. AAPL represents the ticker for Apple. And in those parentheses, it says $1.49. $1.49 simply represents the price that I am down. So currently I'm down $1.49 on my position in Apple. And if you go over to TSLA, which is the ticker for Tesla, you're looking at I'm down $12.50. If you go sit right here and you look at the number below that, which is, let's look at Apple, the number below that says negative $1.49. That represents how much is moved from the previous day close, is down $1.49 overall. And then if you go over where it says 238.20, you're looking at how much the stock is currently worth. So it's worth $238.20. If you look at the bottom, it says that's usually how much your contract is worth with trading. But if you have a long-term position, that's how much the stock is currently worth as well. So currently Apple, if when I click Apple right here, you'll realize that I am holding a long-term position in Apple. So that bottom number represents $238.20 is how much the stock is worth. Now, if we come over here to Tesla at the top in parentheses negative, it says I'm down $12.50. This is simply representing how much profit or loss that I'm in. Obviously, it's in the red, it's in parentheses, I'm losing. The next number you want to look at is that negative 499. That number simply represents how much Tesla has been down from the previous day close. It's currently down $4.99. If you look to the right, it says it's currently worth $345.85. That's how much the stock is worth. That's the middle number right there. And then the last number on this Tesla side says $3,062.50. If you are option trading, this is considered how much the contract is worth, right? So when I click Tesla, it looks different from the other screen, right? This is how you know that I am in an option trade versus in a long-term trade, okay? So this is considered an option trade, and I'm going to break that down here in a few seconds, all right? So remember, the top number represents the P&L. P&L represents profit and loss. The abbreviation for the ticker, as you can see, Apple and Tesla, that is considered a ticker, all right, which is also the nickname for the stock. If you look at the middle number usually represents how much the stock is currently worth. And the bottom number, if you're on a long-term position, it represents how much the stock is currently at. If you're on a trade, it represents how much your contract is currently at. All right. All right. So what I'm going to do is I'm going to currently go down and we're going to go down to where it says account balances. Your account balance represents how much money that you have. So anytime you see net liq, it basically means how much money you have to play with, your net liquidation. All right, once again, P&L stands for profit and loss. If you look right here, it shows to the right at 1404 saying that I lost $14.04 on the day. Now, obviously, we're on account. All right. So if we scroll down some more, I want you to view where it says option buying power. That just means how much option buying power you have. Sometimes this may be zero. And then if you look at your actual net liquidation, you may have more available funds. For the simple fact is your option buying power may be utilized today based off the account that you have. All right. So if we scroll down, and we decide to look at orders. What I like to understand about orders is it has working, filled, and canceled. All right, working, filled, and canceled. Working order means basically it's in the cart, meaning that you haven't purchased this. Oops. Working means that it's in the cart, meaning that you haven't purchased this contract yet at all. All right, it's still in the cart. Let's scroll down to this order section. This order section basically has working, filled, and canceled. I like to talk about this as far as if we were shopping. So, for example, if I'm looking right here at the working section, working basically just means that I'm in the cart. All right, that you have your trade is inside of the cart and it hasn't been filled and it hasn't been taken out of the cart. It's just in the cart as if you were shopping. A filled order means that it actually went through, meaning you bought it, meaning you're currently inside of that position. All right. And canceled. Cancel has two reasons why it can be canceled. One reason why it can be canceled is that it rejected. You didn't have enough funds to actually purchase the contract or the stock. Or the other reason is you manually rejected it or you manually canceled it due to the simple fact that it was working too long, right? And some of the reasons why it was working too long is the market possibly could have been closed, or it's nobody on the other side that's willing to fill that order at that specific price. All right, let's go over that one more time. 'Cause I think I said it a little bit too quick. Working means in the cart, meaning that you're buying it. Filled means that you actually checked out, meaning that you're in that position. And canceled can mean that you manually canceled it or that you didn't have enough money to fill that order. Okay. All right, so that's what orders mean. So let's go on down here next to where it says watch list. It says petty money, but it was just a creation of watch list. Let me teach you how to actually create a watch list. So if you come right down here at the bottom where it says watch list, obviously I have one already created, but let's actually create your own. So when we're going to create your own, we're simply going to come right here and click this pencil in the top right corner. All right, click this pencil. All right. I'm gonna just delete my current watch list, right? And then I'm going to click the top left corner where it says paper. All right, it says create new watch list. I'm gonna create a new watch list, and I'm gonna just call this class, right? I'm gonna click next. Oops, I already have that in class. Okay, class one. I'm gonna click next. It's gonna create me a new watch list, right? I click this class one watch list. Obviously, I don't have anything on this one. There's two ways to add something on here. You can simply click this pencil and you can click search and you can look for stocks. For example, if I'm looking for Apple, I can simply type in Apple. Now, what happens is Apple pulls up their ticker. Now, how do I know which ticker is correct with Apple? There's so many companies that have Apple in there. Obviously, I can always go to Google and say, hey, what is Apple stock ticker? That's the best way that I recommend you to do it. But I know that AAPL is Apple's ticker. All I got to do is click plus. Boom, it's on there. If I wanted to add another stock, say something like Kroger's, it has two different Krogers. How do I know which one is correctly Kroger? Once again, you can always go to Google and verify. I'll simply click plus. It adds it to my list. I click done. Now I have two stocks on my watch list. All right. The next thing that you want to do, if you want to add other stocks on your watch list, you can always click this search bar at the top right corner. And let's just say I wanted to add Macy's on there. I can simply come over here to Macy's, right? And with me coming over to Macy's, you see that star in the top right corner? That star in the top right corner, all I have to do is click plus. And then when I click plus, boom, what happens is it now adds it to my watch list. If I click back, you can now see Macy's has been applied to my watch list. That's how you create a watch list. The next step, option trading, right? Option trading. At the bottom, you have overview, which is always your home page. You have watch list, which is always what's on your watch list. You have trade. When you have trade, trade doesn't represent option trading. It represents buying whole shares. Always remember that. Trade means buying whole shares. So if I sat right here and I click Tesla, as you can see, Tesla immediately brings up a checkout page and it's priced at what Tesla is currently priced at. All right. So anytime I click this trade page, that's not allowing me to do an option trade. That's simply allowing me to buy a long-term share. All right. Let me click close in the top left corner. I come over here to positions. Positions simply mean what positions I am currently holding open, right? So if you look on my margin account, margin is showing that I have an option trade open on Tesla. And if you look at my IRA account, you can see I have one contract, not one contract, one share open on my IRA. All right. So if you come here to the bottom right corner where it says more simply represents other things that I could do with the app. Alerts, balances, messages, calendar, news, trader, all this stuff. The only main thing that I utilize on here is the help button. If I sit right here and click the help button, I want to go to support chat. All right. When I go to support chat, they have a general support and the trade desk. If you have a question about a trade, you want to get right here and get into the trade desk. If you have a question about general support, meaning like, hey, uh, my cash hasn't deposited yet, why not? They'll respond to you. If I simply sit right here, this is why I love ThinkorsWim as well. It's because they have American support. No offense to anybody. But if I sit right here and say, hey, um, my trade hasn't gone through, I was wondering why. You click post, they'll say, hey, somebody's going to reach out to you very shortly, and you can leave it at that. I can go back to doing what I'm doing. And what'll happen is at the bottom right here, it'll pop up something under help. It'll be a help bubble. It'll pop up that somebody's actually talking to you. So what you'll do is at the bottom, they haven't wrote me yet, but you'll see when they actually wrote me, when they actually write me. It'll say that it's pending. What'll happen is I can go back about my day and then I'll have a notification at the bottom right corner when they're actually telling me that someone is reaching out to me in order for support. All right, let's go over how to actually call an option. Now, I can sit right here and click this trade button at the bottom and let me click Netflix. It doesn't give me an option to call an option, right? Always remember, like I went over previously before, that this represents a long-term play, meaning this is me purchasing shares. All right. If you look right here, under buy, under limit, under mid, it says shares. That's how you know you're doing a long-term play. So this is not where we want to be. We want to sit right here, click the search bar in the top right corner, pick our stock. I'm going to click Tesla. And then what's going to open up is it's going to be chart, which is going to show the candle movement, research, which is going to show some news on the stock, and then you have the opportunity to go near the options. So let's go over step by step how to call an option and what these things represent. So for example, let's scroll down. As you can tell, always on the left side, it will be calls. Call means that the stock is going up, right? A put your hand like a cell phone, like you're putting the phone down. That means that the stock is going down. What you're currently looking at is contracts. So where it says 12 September 25, that simply represents the expiration date of the contract. Where it says 19 September 25, that's another representation of the expiration of a contract. So let's just say I wanted to purchase my contract at the expiration of September 12th. Now I can simply click that and these contracts will open up. Now I have the choice to choose which contract that I want to pick, right? So if we look right here on the left side and the right side, it says bid, ask, last, right? Bid, ask, last. So now with us looking right here where it says bid, ask, last, what I want you to think, I simplified this very, very well. Bid, I want you to think about a car, right? If there's a car that's available, I can bid on this car, how much I'm willing to give to pay for this car. So let's just say this car costs $1,000. And I sit right here and say, hey, I'm willing to bid and give you $900. Right? Ask is the asking price, meaning the person that holds the car might say, no, my asking price is $1,000. All right. And then if we're looking at last, your last price is lastly what the contract was sold for. All right. So bid means what I'm bidding on a price. Ask means what they're asking. And last means what it last sold for. All right. Hopefully y'all still with me. Now, there's a couple things that I would like to add onto this. So what I want to show you is how you can add these certain things on here. All right, I want to go over the Greeks. All right, I'm not going to go over all the Greeks. I'm going to go over the Greeks. All right, I'm going to go over a couple Greeks. So simply what I will do is I will click this middle section right here, this gear between calls and puts, right? I will click this gear, boom, and it will open up and it will have me add a lot of things to my option picking. So I'm simply going to find delta, then I'm going to click the plus symbol for delta. And as you can see, delta has moved up to my visible columns, right? The next thing that I want to look for is theta. Theta has moved up to my visible columns, right? So now with those two things, those are two of the Greeks that I mainly look at. So if I now they're still not visible on my uh options, right? So what I have to do is I have to swipe left. With me swiping left, now you can see that delta and theta are available. Let me explain what delta and theta means, okay? Let me explain what delta means to me. Delta means how much money I'm going to get paid if this moves $1 from my entry. So for example, we look at the 345 strike price. Let's look to the left in the call column. The delta on that is 0.5476, right? With that being 0.5476, there are 100 shares in a contract. Remember this, there are 100 shares in a contract. They're going to pay you 54 cents per contract that this moves $1. Okay, in your direction. So if this goes, so right now Tesla's at 346.40. If this goes up to 347.40, they're gonna pay you 54 cents per contract. So if you times that by 100, guess what? You're gonna make $54.76. Another way I love to calculate this is I simply make that $54 and I move that decimal over 2 times to the right, right? And now I know, hey, if this moves $1 in my direction, I'm going to make $54.76 per contract. Now, if this goes against me, I'm going to lose $54.76. All right, so Tesla's currently at 346.40. My entry to the upside, if it goes to 347.40, I'm making $54.76, right? If it goes down to 345.40, guess what? I'm losing $54.76. That's what delta means to me. All right. So now let's look at theta, right? Theta, we don't like theta. It's another reason why I trade futures, but we don't like theta. So with theta, what happens is it's called time decay. Anytime I'm talking about theta, we're talking about time decay, meaning the longer I hold this contract, the more money that they're going to take from me, right? So when we trade, we like stocks that are volatile for the simple fact is if they're trending up or trending down, we're making money. If your contract is moving to the side, that theta, aka time decay, is eating at it. Longer you hold this contract, they're going to basically take $90 from you, right? Based off the strike price, because it says 0.9029. Same thing works with the delta. You move the decimal over twice, they're going to take $90.29 from you if this decides to chop, okay? And the longer that you hold this contract. All right. So delta, your risk to reward. Theta represents time decay. All right. So when we sit right here and we're picking our contracts, we want to weigh out our risk to reward versus our time decay. We usually want our delta to be higher than our theta. All right. That's a good way to pick a contract. You usually want your delta to be higher than your theta. All right. So let's check this out. One other thing that I like to look at when I'm picking a contract. Now, hold on. Cut that. All right, now we went over the Greeks. Now let's look at why and how I pick my contracts, right? So a strike price, the easiest way to pick a strike price is to simply understand that you're picking where you think the price is going to. So with Tesla being worth $346.40 right now, if you look in the current top left corner, and let's just say I thought I was making a call, meaning that it was going to go up. That means I will pick a strike price where I think it was going to. So I can simply say, oh, I think it's going to 350. I will scroll down here to 350 and I will pick the ask, bid, or the last um, for the 350 strike price. So anywhere to the left of this, I can click the ask, the bid, or the last. Either or, right? And with me clicking that, I'm choosing which contract that I want to pick at that strike price. Now, that's me thinking that it's just going to go up to 350. Some indications that help me is going to some indications that's going to help me pick this is going to be by me looking to see where the value and the open interest lies. So that's another thing I like to add when I'm picking my contract. So once again, I'm going to go between calls and puts. I'm going to click this nice handy dandy gear and I'm going to scroll down and I'm going to find open interest. I'm going to click plus and then I'm going to click value and I'm going to click plus and then it's going to add up there. So I'm going to click done. And once again, in order to find this, all I have to do is swipe to the left, right? Now you can see open interest and volume is located. Now, what I want you to sit right here and look at, or listen, if you don't, my bad. Oh my God, snap. Cut that out. All right. Listen, if you don't want to simply look at your open interest and your volume, if you look at volume on my screen, it says OINT 560. If you look at the 345 strike price, all right. If you don't want to add open interest and volume, you can simply just add volume because if you look at the volume at the 345 strike price to the left, it says volume 15,881. And then if you look at where it says OINT, it says 9107. But if you look to the left of open interest, it says 9107. So technically, I don't need these two up here. I can now remove my open interest because my volume is going to tell me how much open interest there is. And let me explain to you, open interest basically just means how many contracts are sitting at that price saying that it's going to go that way. All right, it's a saying in the stock market, follow the money, right? So if there's a lot of contracts or a lot of open interest at that strike price, the chances are that it's going that direction. All right, open interest and volume are very, very handy when choosing contracts. So my advice to you would be, I'm going to pick my contracts based upon my open interest. So if we sat right here, it's a lot of value on Tesla, by the way. If we sat right here and we looked like, okay, on the call side, the highest open interest, the highest volume on the call side would be the 355 strike price at 56,000. You scroll down at 56,396, and the open interest is 10,222. I don't see any open interest near there except on the put side at the 350 strike price where the open interest is 7,040 and then the volume is 53,534. So if I'm following the money, I will simply click the call side. I will look at the 355 strike price and then I'm going to look at, okay, the asking price is $3.25, and then the bidding price is $3.20. I'm about to teach you guys something. The difference between the bid price and the asking price is considered a spread. A spread simply means how much they want and how much you're willing to give. So the spread currently on that contract is 5 cents. 5 times 100 is $5. That's not a bad spread right there. You can recoup that as soon as it goes your way. So let's just say I decided I wanted to pick the 355 strike price for calls. I'm going to go ahead and give them what they're asking for the I'm going to be more obligated to receive that contract. I click next because it's more easier for somebody to fill a contract on an asking price than a bidding price. All right. Remember, it's like you going to your car and you're selling your car. Somebody comes up to you and says, hey, I got that $1,000 that you wanted. You're more inclined to give them that car versus, hey, I bid it, I got that 900. You're like, I don't really know. And somebody comes to you $1,000, you're gonna kick that person out the way. It's more easier to give someone their asking price based upon the spread. Is different scenarios that you have to wonder. All right. So let's just say I come here, right? This is another step of me making a option trade. All right. So let's just say I come here. One thing that you always want to make sure when you're option trading is that you want to make sure if you're buying a contract, it's on buy. Meaning if I'm purchasing a contract, I'm always have it on buy. If I'm selling a contract, meaning I already profited or I'm taking my loss. I want to make sure that I can change it to sell. Straight up. Anytime I'm buying a contract, I want it on buy. Anytime I'm selling a contract, I want to make sure that it's on sell. In this instance, I'm buying a contract. So with me clicking buy, the next thing that I'm going to look for is limit or market, right? A limit order basically is me saying I want this contract at this specific price. So right now, if I change this quantity to one, that means I want you to give me this contract for $325.50, right? But if I sit right here and change it to market, it says the market value currently of this contract is $323, right? And the market fluctuates, right? So when the market's currently closed. So if the market was open, this price would be fluctuating. And with this price fluctuating, market means let me in. I don't care what price it's at. Give me this contract because it's moving. A lot of times executing a market play will be better than a limit just so you don't miss a move. Okay. So preferably, usually I get in during market depending on price action. All right. So I'm in market now. The cost of the trade is costing me $3. I mean $323, right? Now what I'm going to do is I'm going to click here. I'm going to make sure everything looks good. I'm going to buy. If you look at the top, it says Tesla 100, meaning 100 shares to expire September 12th, a 355 call. C stands for call, P stands for put. You always want to make sure if you in a call that it says C. You always want to make sure that if you're in a put, you make sure that it says a P. All right. So what I'm going to do next is everything aligns. I'm going to go to a review page. Your review page is for a reason. You want to make sure that everything is aligned. Let's look over this. Order details. Your order details simply says, hey, I'm buying one Tesla contract, expires September 12th, 2025, a 355 call market. Shit. Everything that I just said previously, that's what I was going to do. This is my review page is showing that. Listen, under there, you can look at this. But the only thing that you need to check out is cost of trade, including commissions. All right. This trade is going to cost me $322.50. Commission is going to want 50 cents per contract. In this instance, I'm only buying one contract. They only get 50 cents. If I was buying 10 contracts, they'll be getting $50. All right. Let's go back because I skipped a step. Listen, when you sit right here and you look at quantity, how many contracts do you want? The easiest way is to click the center, right where the number is. If I want 10 contracts, boom, my price now changed. The cost of my trade is $3,230. If I want five contracts, I simply trade it to five, the cost trades. You can click this plus and this minus symbol to fluctuate it, but it makes it slower. I wouldn't recommend doing that. I would simply, how many contracts I want. In this instance, I want one contract, right? Go back to review. Everything aligns. I click paper trade. All right. I go back to my home screen. Well, you're not gonna be able to see Tesla. Let me do something real quick. Let me do another one. So boom. Let me just go through here, click something real quick. Let me make sure I'm gonna buy. I'm gonna just run through this. One quantity, review, paper down, boom, circle, view order, go to the home page. As you can see, M popped up. That's Macy's. All right. So now the reason why you see at the top is $0. Um, at the bottom is $0 is because the market is closed. It's 4:40. The market club opens at 9:30 a.m. Eastern, closes at 4 p.m. Eastern. All right. So if you scroll down, right, we have orders that are working, right? Two working, one filled. If we look, the working one is the Tesla one I just bought. I can easily click it, cancel it, because we don't want any working orders. All right, we don't want that to fill at a bad price. With Macy's being working with the market close, I'm going to simply click it. It's going to give me the option to cancel order. I'm going to cancel order. I'm going to click yes. Once I click yes, I'll go over here to cancel to verify that it's been canceled. If you look at that time right there, it says it was canceled 9/8/2025 at 4:41 p.m. You're good. Go back to your overview page. You can check it is no longer in your position movers. All right. It is no longer in your position movers. So let's recap all of this. I simply going when I do make an option trade, search bar, Macy's. I'm looking at the bid and asking price. right? I'm going to check out my delta and my theta, and then I'm going to simply look at my volume and my open interest, right? With me looking at this, I now get to choose the contract that I want, whether it's a call or a put, whichever one makes sense. In this instance, the most one that makes sense to me will probably be the $16 put where the volume is 1664, and the open interest is 7,046, right? So now I'm going to simply sit right here and click the asking price if I want to get right in there. It's going to open up. I'm going to make sure it's on buy, right? I want to make sure that it's on buy. I'm going to change it from limit to market, right? I'm going to change it to one contract. Excuse me, I gotta sneeze. And cut that out. All right. I'm going to change it to one contract. The one contract is going to cost me $4.50. I'm going to go ahead and click review. I'm going to make sure my order details, I'm doing a put, meaning that it's going down. And I'm going to sit right here and I'm going to click paper trade. And we have executed the trade, everybody. That is how you make a paper trade. All right. That is how you make a paper trade. That's how you make a real trade as well. It just doesn't say paper trade. All right. So in this next step, I'm going to show. Hello, Ian. We're gonna push pause on that. All right, in this next category, I'm going to show you how to operate in the money and out the money. All right, so let's go like I was calling the option again. Search bar at the top. Let's go with Netflix this time. All right, we're gonna open my contract that I want. And once I open this contract, I'm gonna see all these strike prices. Listen, the blue area represents in the money. All right, the black area represents out the money, ITM versus OTM. All right, in the money simply means that this has already happened, meaning if my stock was at $100, $100 strike price would be ITM, meaning that it already happened. All right, a out the money strike price would be, oh, let me say this properly, excuse me. A in the money call on $100 would be mean $100. And out the money call would mean $101 due to the simple fact that it hasn't reached that high of going up to $101. If we're talking about $100 on a put side, then $100 um call, $100 put would be if it's at $100, $100 put, fuck, yeah, cut that out. All right. I had to swipe my shit. Damn, I hope my other stuff wasn't recorded like that. Fuck. All right. And you can cut that out. All right. Anyways, a look. Anyways, we're gonna go over in the money and out the money. All right. So in the money basically represents the blue area. Out the money represents the black area. So for example, the current stock of Netflix is at 1244.76. So if we look right here, this dotted line that separates the in the money and out the money between 1242.50 and 1245 is representing where the stock is currently at. All right, so with that 1244.76 is currently between 1242.50 and 1245. All right. So with this representing that, what I need everybody to sit right here and understand of it representing that is in the money is the blue area. This means that it already happened. All right. So if we look on the call side, in the money means, hey, this has already passed 1242 because it's at 1244. So obviously it went up past 1242. If we're looking on the put side, saying that it's going down, it's past 1245 because guess what? It already went down past 1245 because now it's currently at 1244. All right. Out the money is the black area. It basically means it didn't happen yet. Meaning, hey, on the downside, it hasn't reached 1242.50 yet. On the upside, it hasn't reached 1245 yet. So when we're explaining in the money and out the money, in the money means it already happened. It's a safer bet or a safer risk. And out the money is more of risky because it didn't happen yet. It's going to cost you less, but it has more of a reward. So usually when I'm picking my contracts or I tell my student to pick their contracts to get the most bang for their buck, instead of guessing where you think that the stock is going to go, what you can do is you can pick anywhere around those four lines right there, right? And I mean, excuse me, you can pick anywhere around that dotted line. If you think it's going to do a put, get an in the money or out the money put right by that dotted line. Or if you're thinking it's going to do a call, get an in the money or out the money call, or it's right by that dotted line, right? That's where you can simply understand where to get your option contract. Or you can always add the volume and the open interest in there. It's just completely up to you on how you want to pick your contracts. But I like to say the most bang for my buck is going to always be down near that dotted line. So in the money is your more safer risk, and then out the money is a higher risk, but at the same time it has a higher return. So no risk, no reward, right?